Good evening, everyone. Welcome to our weekly market overview, where we just kind of get a look at the market to prepare for the week ahead. Quick disclaimer, anything you see in this video is not financial advice, simply for educational purposes. Alrighty, and let's get started here. All right, so, oh, hold on, I don't have my drawing tool. Let's pull that up. There you go. Alrighty, so let's close this for a second. All right, so first and foremost, first thing we always look at is our weekly candle here. Few things that I want to point out. As far as our weekly candles, you'll see when we go through QQQ and SPY, hopefully the differences, but I'll just walk you through kind of what I see here in this candle. So our weekly candle here, obviously we're off of a strong downtrend that we had here. This was the bounce we were looking for, right? Anticipating. I don't know about a $27 bounce, but it was we were looking for a bounce to take place this week, right? So we did get the bounce. One thing that that I'm seeing just based off this candle here is our highs were inside the body of the previous week's candle, so we did engulf the body of the previous week's candle. Notice we did not test the range near the upper bounds of its wick. This is pretty much the area where sellers had stepped up, right? When we pushed down, you can see here where buyers were struggling to maintain buying pressure. And when they ultimately gave up is where we get this wick here. Right, so this is right here is where sellers ultimately started to take control and buyers became exhausted. So this week I noticed that we did fill the range, but we did not test this area here. So as far as we know, buyers or sellers rather still have control over this range. But we haven't tested it yet, so it could easily change, right? I don't know about a $600 push, but we can easily retest this range again this week. We didn't get that. So as far as the candle, it is obviously a bullish candle, right? It's green. The fact that it engulfed the previous week's candle is leaning even more bullish. As far as we're on a heavy downtrend, so obviously it's more of like a dead cat bounce, but it's not as clean cut as a dead cat bounce candle should look. And we'll look at that a little bit later on in IWM. For SPY, it's a little bit more I would say a bullish waiting for continuation. So it is just currently neutral bullish. It needs some sort of catalyst to put us back into this range here. And I think this week might give that to us. With I believe it's Tuesday. Tuesday we have Tuesday and Wednesday. Majority of banks will be reporting earnings, and the financial sector is the second biggest sector of SPY. So if that gets a little bit of momentum, it might give us that catalyst we need to see if we'll have a little test in this range here, right? That's what we're looking for. We're looking to test this range here. So this is more of a heavy downtrend, rejection to go lower, right? Because we have a little bit of a wick. And then just a bounce, right? Just a straight up bounce on a strong push down. We did have a smaller wick here, so the wick is not necessarily super huge. It's still, I would say, over 50% of the previous week's range as far as the body of the candle. So it's leaning more on the upper side of the previous day's range, especially on a bullish bounce like this. So for me, what this candle is just playing out shows me, right, without looking at anything in the chart, this candle showing me that we are neutral, waiting for a catalyst to test the previous area or zone of rejection where sellers had stepped up. So that's essentially how I you know read this candle here. One thing that I also noticed is, zoom out a little bit here. I'm sorry, you guys are not going to be able to see the candles as well, but it's not necessarily what we're looking at here. So this is something I was pointing out a few times, like I would say a few weeks back, looking at where like the lows of the ranges for SPY. So one thing I noticed here where we bounce was our previous area of our bull run, right? So this is our 2020 to the peak of 2021. This was our strong bull run, and then at this point is where we started to enter our bear phase during the end of 2021 to beginning of 2023. Every 2 years, the market enters a new phase. So we entered our bear phase here. I drew this line. I should probably draw it in a different color. I don't think I have purple, so we'll go with red. Our 200-day was hovering like this for some time. That's indicator of a bear trend, right? Our weekly trend, our 200 daily simple moving average was, we were under it for several months at a time. And once we finally got the bullish momentum to take over, we started entering our bull run. So of all places to bounce, at least for a dead cat bounce, the previous, was too yellow. Okay. The previous bull trend high is a really good spot to stop. And I just found that interesting. That's kind of where we had the bounce here, was that 580 level, right? 587. And this is a perfect spot for our possible bounce here, right? So this is where we start to look for some consolidation here, and look for continued rejection in the lower bounds of this range here. And then we can look for more downside, right? And what is the lower bounds of the range? I would say we have the upper bounds here near 560, and the lower bounds is anything under 560 up until this 480 level. So we need to build some price action in this range, create some rejections here underneath 560, and then we look for a further flush. I don't think we get to 560 right away, or at all. It's just the area where the upper bounds are, right? Not necessarily saying that we go to 560. I'm just saying that that is the bounds of the upper range. So I would like to see some price action start to build up in this range for us to have that further flush down, if that does end up taking place. All right. And then taking a look at our weekly, I don't think I had anything as far as trends. Yeah. Yeah, there's nothing too much to say as far as our trend lines here. We just were in a strong downtrend for some time. We had the flush underneath, and it's just a retest of this range. It's nothing too significant here. Let's see about the daily. On the daily, same situation. Let's go ahead and close this out. On the daily here, obviously you see this huge candle, which is great because we actually closed at the high, and we barely had a wick. It's like a tiny little bottom wick here on that Wednesday push up. But on our candle here, we're just going to be looking at our Friday's candle and see what that shows us, right? So our Friday candle Our Friday candle is where it gives us that clues or indication that we're in like a settlement phase, right? We're trying to consolidate and look for momentum to choose a direction. Oh, I didn't mean to zoom out. Plus, there we go. Okay, so we had our push down for some time, right? Now I'm just going to be looking at this big push up that we recently had, right? Our pretty much some like a dead cat bounce, right? Off of days and days of a gap down, and continued rejection in this range. We eventually had a nice bounce, and that pushed us right out of that area of rejection, right? So I don't like that. That's there. Okay. So following our run up here, our red candle on the next day, this is Thursday, showing it shows signs of one, us trying to hold over that 520 524 level. To be specific, that's what we were looking at this week. If you were attended any of the lives during the week, this is kind of something I was looking forward to see for a breakdown out of the gap up. So this area right here is that 425.75-ish level. This Thursday candle is showing me that one, we have buyers rejecting um any price action below, or they're holding up this area of range, and they will not allow price to go down, right? Then we start to see a little bit of resistance around here building up, but we did take out the previous day's high, right? So we created a new high on Friday compared to the last previous days, right? So we're on a slight uptrend here. So now what I'm looking for us to have catalysts, especially coming into Monday, um, especially after a huge bounce like this and rejections to push lower, and we're inside range here on a candle, right? We have a upper and lower wick that's not too excessive, right? Upper wick that's really excessive shows me a rejection in this area. Uh, a lower wick here shows me a rejection in this area. If we're sort of can if we have an equal body and wick like this, shows more of a consolidation in range. So essentially what I'm going to be looking for as far as where does the momentum take us, right? Because right now we're just bullish but consolidating, trying to make sure that we have um, a catalyst that will give us momentum. So to put it simply, after a dead cat bounce like this and any rejections to go lower, on QQQ, it'll be a little bit more cleaner because tech tends to be more volatile than the financial sector. But if you want to just keep it as simple as possible, just Friday's range alone is going to be all the. Just Friday's range alone is going to give you all the clues you need. Just take out the high and low of Friday. I would suggest putting that on your chart. This will give you your catalyst for any downtrend, right? So if we have a push down, I don't know if we flush and fill that whole gap, but you can easily look for this range here as a risk to reward in this area. If you look for a break into the upside, an easy risk to reward in this area, that's going to be your clean cut trade right there. Just looking to break out of our consolidation range here and look for any momentum that's going to give us either a push towards the top end here or to test the lower bounds of this rejection zone where we rejected it here again before. So that's going to be your clear cut direction as far as where SPY is going to lead the momentum to. If we go back to our pathing here.
Hey, real quick. So, those wicks are signs of weakness, right?
Not necessarily. What wicks are you talking about? Let's look at it. Which one?
See the green. Okay, the one you showed where it resisted, where it hit resistance, the green one, that
Right here
long wick. Yes,
on this one.
yes, sir. Signs of weakness once it gets to that top of it. or am I
Yep,
wrong?
that's signs of, this is what I was mentioning with, it's a good thing you pointed out. That's what I was mentioning with the weekly, how we didn't really test that range. But if you look here, right? So we have a red body candle, right? That's just sellers in control heavily, right? Our next push down, right? I'm assuming this is a little bit of a push down off a gap. Our next push down rejected this entire range, showing me that sellers respected or had control over this entire range, and buyers could not. All they could do was step up at the lows, but once they were in this range, they could not close within it, right? Look at the high and the low. This is a complete rejection of this range. Does that answer your question?
Yes, sir. Yes, I remember you were saying you make your wicks different colors than the candles.
Yeah, just because it pops out, right? The white kind of shows you really clearly. Because it doesn't
Exactly,
matter
man.
green
Thank
or
you.
red. You just want to see what the wick is doing in in your levels.
Appreciate that.
Yep, not a problem. All right. As far as pathing here, I'm not gonna go too crazy looking for path in here. Like I said, we're just kind of sitting in the middle. I really want to see how Monday plays out. Um, we're in futures. We gapped up a little bit here. Even if we filled the gap overnight, near like the London session, so like early five, like 4 o'clock, 3, 4 o'clock in the morning, even if we fill that gap, as long as we stay within that range, it's not out of the woods for us to just continue back in range of Friday's highs or just above it, or even just a slightly below it, but near Friday's highs, or closing is not out of the woods. So I'm really gonna see how Monday plays out. That's gonna give us more clues as to where sellers and buyers are, what levels are they respecting. So we're not totally there, right? On the close here, we just have a few rejections near this like 534 area, struggling to break above it. But it's not necessarily a rejection just yet. It just looks more of just a slight resistance for now, right? Because look, you can look here earlier. Um, on Thursday, we just have that rejection near this 528 level. And eventually we just had a little bit of catalyst that pushed us right through at 1230. No problem. So it's not out of the woods that if we do have a little push down, another push down, right? If we open in this range or even slightly below at this range, it's still not at the woods for a catalyst just to just push us right through and take out those highs. Our major thing is going to be the previous high in the range. We did fill this gap here, so the next target is going to be towards, I wouldn't say the gap. I'm not looking for a gap. I just want to see around this range here, untested range, right? All we have is a slight rejection off of a ridiculous push up. This is not really a strong rejection or an indicator that price does not want to go higher. That just tells me that buyers began to get exhausted, right? We ran up $27, $28. At some point, how much more can we continue to run up? With so much hours left in the day or minutes left in the day. So this is not necessarily a rejection for me. So a push up here to test this area for a rejection is not completely out of the woods. So as far as upside, or where we move, right? So that's, I'm not gonna rush into where the pathing of anything is. I will look at some targets with you guys here. So our yellow line here is our 5 SMA, which is essentially your 5-day average, right? The average of the last 5-day price action. It's also a very good indicator of the current trend. So with this current trend, we're over it. We bounced near it and continue to consolidate over it, and now we're strongly over it. That is just overall just a bullish sentiment, right? So we're off of a dead cat bounce, supported it. Now we're in this range above it. If any momentum pushes us up, I would say our target's going to be the 200, the 20 here. This is our 20 SMA, our 20 here. So around this five, it's probably going to curl down a little bit. I'd probably say like 548. That area, it's going to be like right near where it previously rejected. We didn't get the test of it, so it's even if we push down, like I said, and we just start to slowly curl back up and consolidate in this range here. We have overhead rejections here, which we consolidated over. Don't know why I changed color. Which we consolidated over, right? Consolidated in this range where we had previous rejections. Consolidated in this range, showing me that buyers aren't ready to give up this area. So if we do have a little bit of a push, it's not out of the woods for us to retest that 200 here. If we do get a bounce here, then I would look for more catalyst near a final rejection near the 200. I don't know if that happens this week. We're on a short week. Possibly next week if we have any momentum upwards. As far as downside, simply I'm just gonna look for um a failure near. So if we have a push up, a failure there, and then push down is possible. But if we don't even get up there and we start to have our 5 SMA catch up, it's around the 521 level. If we do have any momentum that opens up on Monday, and we say we push up for a little bit on Monday, later in the afternoon, we can have like the 5 SMA end up at that 524 level, which is going to be our do or die level. So it's not out of the woods for us to have a little bit of a push up, and sellers take control or buyers get exhausted, and then we fail underneath the 524 level and start to try to make attempts to fill the gap around this area on the push up. Um, Especially if we start to lose 510 area, our previous low here. So I'm not going to rush into pathing, like I said. That's just one thing I'm going to be looking for. If I do pull up any drawings, let's see, I have here as far as trend lines. These, you guys
Smoove,
know I do post. Yes.
quick question. You
Yes, sir.
mentioned like it's a short week. Do we have a holiday this week?
Oh, yes. So on Friday, it is
Which
Good
day?
Friday, and we do not have trading on Friday.
Okay.
Yeah.
Oh, I didn't realize that.
Yep.
Okay.
It's Good Friday. I think futures is still open. I know
Till 12
obviously
p.m.
crypto is open, but I think futures will be open.
Mm, till 12.
Mm-hmm. Yeah.
Okay.
So it's
Thanks, bro.
yeah, yep, not a problem. Um, what was I saying? Okay, so in far as pathing, I'll go through this throughout the week. As far as like any trend line, sorry, any trends, I'll go through this out throughout the week to see if we do get a break here. As far as only thing I have here is we're struggling to support over our sloping resistance here, but I'm looking for just a break of this channel here to look for any downside to see if we can get that test here. I'm not looking for a downside like a straight flush. I'm going to be looking to see if we break this buying here, um break this buying channel here to see if we can get that test of the 5 SMA, and maybe we create some type of structure off of it, right? What do I mean by structure off of it? I mean something like this where we start to fail and then our 5 catches up like this, and we consolidate in around this range here, this 524.75 area before we ultimately lose it. It'll give us that head and shoulders. So let's see if that takes place. That's probably the only pattern I can see taking place right now. As far as the upside, there's not necessarily a pattern to be looking for. There's never always a pattern. So I mean, you can just strictly look to see if we take out the highs of the week and look for that test of the 200, the 20. So if you see any strong buying continuation, any strong buying building up, the 20 SMA is going to be a very nice target for price action if it does want to push up. I think we can move on to QQQ. Go to the weekly. And for those of you that are new to our server, as all of the levels that I post there will be posted at the end of this live. So you'll see it in the market overview as well as all of our news for the week coming. That's already there, as well as the earnings. So be on the lookout for our levels after this. All right, so let's close this for a second here. Now looking at the weekly for QQQ. Do you guys see any difference? I will take a participant before I move on. Anybody see a difference
It's a,
between
it's
QQQ
a
and let's
mirror
go?
chart,
Is it?
literally.
Is it?
Almost. It looks like a mirror, bro.
Anybody else? This is our one more time. I'll switch back and forth for you guys.
Switch back. Switch back. Let's have a look. Yeah.
Spy, QQQ. This is
Wait.
QQQ.
Pull the spy. Pull the spy.
Mm-hmm.
Okay, go back to QQQ. Okay, now I'm really curious.
Move,
Anybody
you're
else?
asking people about like these amateur people who don't know what day that market is open. You're asking them these complicated questions.
Exactly.
No, it's not. No.
Exactly.
I made sure I went over it at the beginning on our weekly spy candle. So it's I'm just curious to see if anybody's fresh eyes sees any difference. So Moen, you don't see any difference.
Well, there's a major difference here. All right. If you remember the spy chart, the place where you basically showed the wicks and the gap, okay, for the first day, this thing is showing you something very, very different here. Pulled out the chart.
This is QQQ
Yeah, pulled out the chart.
and this is spy.
Yeah, the one you had in the farthest range, thing that we are showing us, I literally feel there is a significant difference there.
Yes, that is correct. All right.
Sometimes amateurs can answer a few questions.
Okay, so this is what I'm seeing here on this weekly candle here for you guys. So unlike SPY, right? SPY engulfed the previous week's range, right? The body, right? This is our true range is the candle. This is the total week's range, but our true range is the candle because this is where we closed, this is where we opened. So this is our true range. If you look at our wick here, SPY, all it did was here, I'll draw it out so you guys can see the difference. So terrible drawing, but I will try my best here. So this is SPY's candle, right? The wick touched the top of the previous week's range, and that's where I get the bullish candle, but neutral unless we get some type of continuation, right? With QQQ, it engulfed just like SPY, right? We engulfed that previous week's range, but we also once again rejected in this range here where sellers are in control. So SPY didn't get that rejection above. We didn't test the range where sellers stepped up. QQQ did, however, do so. Right? That's the major difference right there. Is aside from the range and the amount the length of the body, because SPY's is slightly bigger. Especially with the downtrend. I think SPY went down like $12 as opposed to QQQ only being like 7. But the major thing here is we had a retest of the previous area where sellers had stepped up right here and pushed price lower. QQQ did get a test of that range and rejected, and we closed below it. And as far as our range, right here, closed in about closer to the closer to the 50% mark than SPY, but that's just penny pinching. The major thing here is just we did get that rejection in the range, unlike SPY. So SPY didn't get that test. That's the major difference between the two on the weekly, and that's essentially why I look at the weekly here, right? So our tech is lagging a little bit behind on, well, SPY is lagging a little bit behind on as far as tech, right? So tech already had the test of its previous rejection zone. It had a slight rejection. It's not a complete rejection, but it is not as strongly bullish as I would say SPY is, because SPY did not get to test that area where sellers stepped up. Hopefully you guys got that there. Did that make sense, Moen? Or
That's why I
Usman?
always listen to you.
All right. And then as far as our daily candles here, our daily is not any different than SPY. This is where it's kind of the same. We're just consolidating after a huge push up, a little bit of a sell-off, and now we have buyers holding up price in this range, and they're refusing to allow price to break down below. And it's more of a consolidation in this range until momentum gives us a direction. And as far as what I was mentioning earlier about just the highs and lows of Friday, QQQ is going to be your better catalyst, because tech is very volatile, right? So just losing the price action underneath Friday's range is going to give us a retest of this area with momentum, almost surely. I don't know about the upside, as far as if we push straight up and test this area, or if we want to test this area. It's tech is really momentum based, so a break of Friday's highs or lows is going to be a good direction, especially with tech as opposed to SPY, where it still has other factors to it, right? Our energy sector, our discretionaries, our cyclicals, financial sector, tech, so many things go into SPY, that one thing can outweigh the other pretty easily depending on the catalyst for that area. As far as QQQ, it's majority, it's only tech, and it's not financial backed tech, right? So like PayPal is tech but financial tech. So a break over here is going to give us quick momentums to the upside or the downside. So that's one thing I'm really looking at, just simply the previous highs and the lows of just Friday's range. That's going to give us a clue, because we're kind of consolidating here and we need momentum to choose a direction. Let's see if I have any. I don't think I have any other trend lines here. Go to the 30. I think I had, yeah. Okay. For QQQ, I have a few little trend lines here, similar to SPY, as far as where our pathing is. It would be slightly difficult to give you a for certain where the pathing would be, but let's pull up, I think, the tool here. So for any bearish sentiment, I would want to see our buying here, our strong uptrend, break. So that would be your first test. That would be your first confirmation, would be a break out of this range. Our 5 is going to catch up. But the bigger move to the downside is going to be when we break out of this range, right? So we could break it at any point. So it would be hard for me to give you a level, but I would think the best level is going to be around this 541 level. 541 would be stronger, because it doesn't matter if we break here, we flush straight down, or we flush up here, it doesn't matter. 441 is going to be more of a stronger indication for any downside. So the only thing I'm going to look at is I'm not looking at any specific pattern to play out. I'm simply just looking to see where the buying will lead us. Similar to SPY, I guess you can have a head and shoulders here where we're building up, and then our 20-day simple moving average is right here, right? We tested it on QQQ. Once again, something that SPY did not do. We didn't get the rejection just yet. So if we do get one final test here of it, that would be a clearer indication for a rejection. Or do we get a retest and we push over it with confidence? I'm not too sure, right? Even if we do push over it, we're still going to be in this buying channel here. So I would need to see some break of this, maybe create some type of structure in between, develop a pattern here, maybe on the 1 minute, 5 minute, you might see a bill flag and you're just waiting to get in for the upside. So I would look for the smaller time frames to see if there's going to be a pattern that builds out, but we can still look towards this area being a rejection even if we break out of that range. But for pathing, like I said, let's go back to the bearish pathing, right? So we can have a rejection here, push down, consolidate. We can consolidate and maintain our price action inside of this buying, just slower controlled buying, right? It's not as necessarily as strong as this. This is stronger buying. This is the orange here is going to be a little bit weaker. So we can still slowly grind up here. I know it probably looks weird when I scribble, but we can still grind around here and then create the head and shoulders to push towards that 541 level, and then completely do the flush towards the bottom end of our range here. That's a potential that we can be looking out for. As far as upside, like I said, the upside is going to be, our upside is just going to be to see if we uphold this channel here, even if we break out of it and we continue to hold up price above this area here, our 548 level, 548, 545, around this previous rejection zone. Long as we hold price in this range where we consolidated. Remember earlier where we're looking at the daily and the weekly, or the daily rather, where we had this area where we rejected, and then eventually we consolidated in that range. So long as we have a break, even if we have a break and we hold over this consolidation range, we can look for some potential upside. Like I said, I would look for more of the lower time frames to see if you can identify something in between as far as your RSI, your MACD, or whatever you look at. Just look for momentum and strength building up. And then we look for the retest and the break over 200 if we do get that. So those, as far as pathing, it can't give you a perfect pathing, but that is definitely what I'm going to be looking for to see if we break above. If you want to keep it simple, it's going to be the 464, our weekly pivots here that we always mention. You just want to see price either above or below it. If it's below it, honestly, you can probably short it and still be fine. You might just break even. If it's above it, you can long until as long as the price remains above it, you still would be fine. It's kind of why I bring these strong pivotal points, because if it ends the week above or below, the chart itself would be either inherently bullish or bearish. So yeah, that's one thing you can be looking for if you want to just keep it clean cut over 44 or 464. That is quite a range. But if you want to be safe than sorry, that would probably be the range that I'm looking for if I want to see some upside. Or some continuation to the upside, rather. All right, let's quickly go to QQQ IWM here. Anybody have any questions? Concerns? Scares? Mishaps? No?
I was wondering, hello everybody. I was wondering if the news that Trump backtracked on his moratorium on exceptions of tech. If that's going to um, impact all the things that we're talking about here.
I want to see Monday open up. Like I want to see when the actual volume in the chart comes in to see if it would have an effect. Because the more I look into the news, I'm getting a news report saying that that's not true, then a news report saying it is true. I think I just want to either hear him talk about it on a press conference um, tomorrow or even tonight, but probably tomorrow when we have all these Fed speakers, and we'll have more concrete statement rather than hearsay and this person said this but now I'm backing out and now it's still too early. It's a Sunday. They're gonna play games with us, but Monday is really gonna set the tone for if it wants to be a catalyst for the upside or the downside. I think everyone's really gonna be looking towards our financials here this week, and then I believe Wednesday Powell talks. In between, Trump's gonna have definitely an influence upside and downside, but those news catalysts as far as our bank earnings and our news, or I think it's the retail sales on Wednesday and Powell, that's probably going to give us a momentum trade that you can actually take without having to worry about like chasing, because with anything with Trump says, even if it goes down or it goes up, you're essentially going to be chasing it because it has no rhyme, no reason. But these news catalysts, they have some backing to them. There's either jobs data, um, retail numbers saying that they're going up, and inflation. If it's going up and our inflation starts to go down, that shows that people are comfortable spending money. And then if it runs up, you feel more comfortable looking for an entry to the upside. um I hope that kind of answered your question. So I'm really looking for Monday. Like actually
Okay.
market open. um okay, and then for our IWM here, starting with our weekly. Now, this is what a dead cat bounce looks like. This is a clean cut cat bounce. As far as the other, how I'm saying SPY is more of like a bullish neutral waiting for continuation. And QQQ is more it's a bullish candle, but it's lacking direction. Here IWM is a clear dead cat bounce, right? A clear dead cat bounce here is this complete rejection in this range here. We're closing on the lower half of the range, right? We're underneath the 50% of the previous week's range. We had a huge bounce, and even on our single week's candle, we're barely at the 50% move, right? We pulled back nearly like 40%, I would say, or 38.2 if you want to be like fib wise. We pulled back quite a bit off of the bounce here, right? This is an indicator of how a dead count bounce is. Usually it is a push, a continuation push lower, and a strong bounce to the upside, going back into the previous week's range with obviously a green candle, close with a green candle close, because if it's gonna bounce and it's a bullish bounce, it's gonna be green. But what makes it more of a dead cat bounce is just the complete rejection, especially in the mid range of the previous week's range, as well as we couldn't even hold up more than 50 more. We can barely even hold the 50% move of the initial push up. So almost 50% of the rally up has faded. That's a clear indicator of like how a dead cat bounce would be, right? It's gonna We're in a strong downtrend. It continues down. Then it has this huge bounce up, and then it slowly fades right off. Right? IWM had this. QQQ did not is leaning towards it, but SPY did not get that. Right? We're just looking for some continuation in either direction. We didn't get to this phase where we rejected a range or an area where we can clearly see where sellers are holding control, right? So in this range here, right, we can just look at these levels as like this. In this area, let's even do the 50%. All this entire area, sellers are holding up. Not holding up. They're very confident and in control of this range. We have not had any buyers step up in this range. All we had is sellers continue to dominate this range. And of course, this is our low, so this is our only reference to where buyers have stepped in. Once again here near where buyers are stepping in, but we have a clear rejection in this range. Yes, sorry.
Sorry, do you factor in volume at all when you're looking at like a dead cat bounce at all?
Yes.
Because Friday's volume was insane. Like, I mean, comparatively, it was ridiculously high compared to the rest of the day. So that's why I'm asking.
So, the buying on a dead cat bounce, right?
Yeah.
Obviously, selling pressure. You don't want to see selling pressure immediately out of it. Then that's that breaks above the Wednesday's push up. That's going to be your knifing, right? When you really see a huge knife, and the market after a run up, that's going to be more of a sign of a knife. Oh, mute your mic, Mr. Michael, please.
Nope.
So a knife is going to be when we have a huge green volume candle, and then a red candle takes it right completely out with higher volume. On a pullback, that's going to be your knife. A dead cat bounce is usually where we have obvious seller pressure following the bounce, but your clear indicator is going to be when we start to see the fade off of the volume, especially if buyers could not even could not even break above the previous day's push up range, right? So this is where we had our lows of the week. We didn't even have equal volume of the lows of the week. Couldn't even attempt to push above. It's a little bit easier to see on the daily chart here, where we have a clear rejection off this range where we had this is our rejection of this range here, is where sellers are in control. This is the range that we were looking at a couple seconds ago. It's also this range here as well. But yes, I do look at volume. I'm trying to think about how I did it in between, but I did definitely look at volume on the way down. On why I looked for why it looks more of a dead cat bounce to me. For me, I just strictly looked at the way the candle formed. And that was like a huge upper body wick and a small body candle on a long wick like that, where we have this sort of smaller body and large wick is more of a rejection of that range. Okay. Then daily, there's nothing really for IWM that I had seen. One thing I did see here, let's look at for IWM, is the daily or the hourly that I drew that out? It was the weekly. A few weeks back, we were looking at a strong selling channel here building up on the way down, and we were looking to see if any bounces could give us another flag along the way. When we had that break out of it, it had a huge push down. So now I'm looking to see if we build out that same kind of flag pattern for another flush down on IWM as well. on the daily, or let's do it's a 30-minute here. Yes, that's where I had. This is pretty much how I match the channels to the time frame. So on the 30-minute, this is essentially what I'm looking for to see if we have the breakdown or we have buying that builds up. So I just want to see for any downside. Not only do I want to see a break out of this range, but the thing is we have a lot of consolidation in this area. So even if we do have a breakout, it's not out of the woods for us to have a little look below and just push back right into this range, and this area just be a complete fake out. Could be a day or two where we just have a complete fake and we're back in and we push straight back up into the 180s area. So for me, specifically with IWM, this range here is probably going to be a no touch zone for me. I'm going to be looking for the 178 level to break for more downside, and I also want to see the 181 level be held up on any pushes down, right? I just want to see if we can maintain this area, and then we look for any pushes up and continued rejection against our sloping resistance here. But as far as downside, I just want to see mainly a break of 178. That will give me more confidence for us to have a push into this range here, the lower bounds of this range. But I would not be so quick to short. I know it looks good to just short here and then you want to hold all the way down. But there's so much chop in this range. It's unclear where a push down could just give us a small bounce. It doesn't necessarily have to be a bounce complete recovery, but any little bounces in this range is going to destroy your premium on your contracts. So for me, the 178 level is going to be your more clear indicator of where we can look for some downside. As far as our upside here, this is the range where we have our sellers dominating and holding up right here. This is that range here where they're refusing to allow any price action above it. So it's being strongly, it's a pretty much a big line in the sand for buyers. But we could look for some upside towards it if we do get that, right? So upside could be look something like this, where we have unnested. It's going to be a little bit smaller of a head and shoulders here, or inverse head and shoulders, something like this, where I want to start seeing price action not only go over 180.85, because that's not going to be your confirmation. Confirmation is going to be a break over 185 and hold, right? I want to see price hold over this range, because before, when we had a break above, it could not hold above in this range. We didn't even get much of a test in this range because we gapped down. So we don't even currently know if buyers are able to even maintain this 185 to 186 level, right? It could easily just be another rejection for a head down, a push down, and then we have the same thing that's building out with just like we have on QQQ and SPY, where we're just going to be creating that head and shoulders again. But one thing that I did notice is just looking for a head in, inverse here. It's a smaller shoulder, but we have inverse that kind of will look like that. So I kind of want to see if we do have some price action that builds in this range to test this area, right? Even if we go down, that's fine. But if we can respect the 185 level and hold over it, and any pushes down, even if we look below it and then start to gain right back in, that's showing me signs that buyers are willing to step up at this 185 level for us to test the upper bounds of our weekly range here. And retest that area where sellers had stepped in and where they currently are holding up strong confidence and price action, right? They're not allowing anything to go above. So we're going to be looking to see if we can have that consolidation, that push up here, and then see if it pushes up into this range. And then we look for test of that 185, 84, 94 level. And that's going to be our strong pivotal point to know if we are leaning more bullish than bearish. I think that about wraps it up. If anybody has any questions, let me know. There's nothing too much to say with the sectors. If you guys are curious, I'd probably say this for our XLF. I'm looking to see if we break over the 4750 level, 4744 level. I'm gonna go ahead and mute you, Suede. I'm sorry. So yeah, the only thing I would kind of look for here is to see if we can break over this 47, 44 level with the earnings coming out this week. That might give SPY a little bit of a catalyst to push up. Like I said, this is our second biggest sector in SPY. So this having a little rally would be nice for that momentum that we need if we want any momentum for the upside. So that would be a good catalyst. And if we lose the 4580 level, that's going to be similar catalyst for the downside, because then we'll have tech and the financial sector starting to fail, and that'll give you more further confidence in any shorts that you may want to take. And I think that about wraps it up. That's the only sector that I really think has any significance. The consumer staples sector. This is our defensive sector, so it's starting to push up. If it continues to hold up price, then we can look towards that sector rotation into safer stocks. And that just shows signs of people lacking confidence in risky assets, and they're going to be moving their assets more into safer, stable assets as the consumer staples. This is your, Coca-Cola, Colgate, stuff like that. Your major necessities. And we also want to see the financial sector start to have some momentum as well, or not financial, the healthcare sector have some momentum up as well. That's going to just give us further clues that the sector rotation is starting to take place. We just don't see that yet. We do see a little bit of a sign in the XLP here. So yeah, that'll probably wrap it up for me. If anybody has any questions, please do let me know. I'm gonna go ahead and end the recording.